Hey guys, and welcome to the weekly analysis for the week starting with June 28th, 2026. We are in the last week of June and the first week of July, which happens to transition right in the middle of the week on Wednesday, which is going to be Canada Day here in Canada, and followed up with Friday, which is going to be a bank holiday in recognition of the 4th of July. So it is a short week. It is going to be quite a volatile week because we are closing the quarter end, of course, and as well as the month end when it comes to the month of June. As well, we are looking at Kevin Warsh testimony on Wednesday, which is going to be a market moving event, and also the NFP on Thursday. So that is, we're going to get some visibility into the jobs data. Over the weekend, we heard some escalation that came from the US and Iran. Iran bombed a few boats that were passing through the Strait of Hormuz. US retaliated, then Iran retaliated, but they retaliated against American bases in Bahrain and Kuwait, I believe. But essentially after that, we are just hearing quite a bit of rhetoric from both sides around the break of the ceasefire. But, if we were looking objectively at it, the actual break did start with Iran. And it's not the US per se. Nevertheless, the escalating rhetoric actually started after the 4 p.m. on Friday. So that is, we have the etiquette where we don't do any type of war action during the market hours. And that is because we don't want to bring this volatility into the market. But what was interesting to me is that these strikes probably couldn't have been predicted per se from just the price action alone. And some people are saying it's like, oh, you could take a look at the price action and predict it. But these drops in here in themselves is not enough to actually predict the price action. Drops in semis as well. As like if you're looking at all of the other sectors, what you see is that the money is flowing into the healthcare, some gold and silver and copper. We have some staples and discretionary, so consumers, utilities, and a lot of that is very defensive. But at the same time, when we're talking about Strait of Hormuz, what we want to see every single time is some sort of move in oil. And if you're not seeing the move in oil, then that is not necessarily an anticipated type of move. So in here, we did see that oil continue to drop of 1.69% down on Friday, and that is giving me visibility into potentially the entire sell-off was not related into predicting the attacks and the escalation in the Strait of Hormuz, and more so about the market rotation more generally. And what we do see quite a bit is actually a rotation into the defensive sectors, as well as sectors that have been beat up previously. So that's IWM, XLF. So all of them are getting some flows. We're getting flows into gold, silver, as well as copper. Some of the discretionaries, and even Bitcoin is catching a little bit of a bid in here. What's interesting from the option chain perspective, a lot of these were sitting at a very strong walls resistance support in this particular case, and allowing for the market essentially to do a little bit of a bounce. The biggest trade that has been hit is ultimately semis, as well as a little bit of XLK. So some people are talking about the Mag 7 where there is quite a bit of rotation, but which is true, right? There's quite a bit of broadening that is happening within the market, which I would say is fairly healthy rotation, because you don't want to see all of the market's money essentially being concentrated into a few stocks that are driving into the positive direction. But that being said, it's relatively healthy to see some of this rotation. Other than that, what do we have also on the deck? So from seasonality perspective, the first 2 weeks of July, right before the earnings, we typically see quite a bit of bullishness, and through the month of July, we also see quite a bit of bullishness. We also are, and I have like the seasonality chart right here. July typically tends to be a very bullish month, but in 2 weeks, we are going to start the earnings seasons again for Q2. And that is ultimately going to be moving us towards that part of the midterm year seasonality, where the earnings are ultimately going to be make or break it for the market. So my anticipation is that we potentially can do a little bit more of a run up and then essentially start decreasing from the perspective of the market going lower, going into the midterm election around October-November timeframe. Let's see how this plays out. But let's take a look into the structure of NASDAQ. Right now we have a nice box in here. Some people are seeing head and shoulders in here. I'm having difficulty seeing any head and shoulders in here. If anything, I see a double top at this point, but maybe you can say that this is a head and shoulders, but typically you would want to have a nice shoulder here, head and another shoulder, so you have a very clean shoulder type of neckline like this through the top, from which we would break and then continue going higher. So to me, this is not necessarily a head and shoulders pattern, but what we do see is an interesting structure in here with up, downs, and all arounds. And if you do look into June seasonality, this is exactly what June seasonality looks like. A dip in the beginning, recovery through the middle, a dip at the end, and then we are taking off for the month of July. So if that is the expectation, we do have a little bit of support in here, actually, to take a look into it. I will be updating all of these levels, but if you notice, we are essentially sitting at the monthly expected move, and the price practically came to the monthly expected move, tagged it, and then started continuing higher. But it still didn't tag it, and because it didn't tag it, there's still kind of that opportunity for us to come down and stay here and remain pinned around this level. What you do also have in here is lower monthly expected move, lower daily expected move, 200 daily T, which is trend regularity adaptive moving average, as well as the put wall. So what I would be not surprised for the price to do is essentially do something like this. Finally tag that 200T, come back here, maybe consolidate, and then take off to the upwards, to the highs of the month. I will do the more proper analysis next week as I update this upper monthly expected move and the lower monthly expected move for the month of July, as well as update the quarterly moves and the JPM collar. But I wouldn't be surprised if we consolidate a little bit, start maybe some recovery right here, and then continue going higher. On a daily time frame, you can see another interesting situation here is where 20T actually started recovering right here. So we briefly dipped below the 50T, and that resulted us into resolving a little bit lower. Right now we actually are having the opposite direction and resolving a little bit higher. This is month end, so there's a lot of rotations. Because QQQ performed so well, the stocks performed so well, what funds have to do, they have to now sell off some of those stocks to get back to the 60-40 portfolio, and that is one of the rotation that is happening. On July 7th, we do have inclusion of SpaceX into NASDAQ, and that also needs the money to be freed up for the rotation into SpaceX, because that is going to get a little bit of a bid because of this. And what I'm anticipating, and I talked about it in my other videos, is that for SpaceX, what we probably are going to see is a little bit of recovery. And then after that, we are going to be selling that thing once again, SPCX. So let's take a look into it. Ultimately, we did come down all the way. That was 34% drop from the FOMO. Right now, we're creating a little bit of a structure. There is a little bit of call wall. And if the money now needs to rotate into SpaceX, it is going to go and accelerate for the higher prices. And at which point it might start dropping once again. And that is going to be the end of the IPO opening price for SpaceX. More generally, that is the thesis that I'm exploring right now, and we will see how that ultimately plays out for everyone. So other than that, from the sector perspective, VIX also dropped quite a bit, so volatility dropped and NASDAQ dropped. So there's a little bit of that that situational momentum that is interesting to watch, because essentially what it tells me is that this drop is not necessarily very convincing, and we need to see more data before we can actually go and make conclusions. We do have equal highs in here, equal lows on the bottom, so there is liquidity on both sides of the equation. The question is, of course, which liquidity we are going to sweep. And if anything, I would go and sweep this liquidity right here. So that is why expecting a little bit of that drop lower and then starting to recovery through the week, as we are anticipating Kevin Warsh and then anticipating at the end of the week NFP. So that being said, let's take a look at some of the names that I have on the radar. Starting with what happened previous week, MTN dropped quite significantly. I don't think this thing is going to necessarily recover. We failed to take over this point of control, so I'm just going to remove it from the list, and it actually never fully triggers. You can see it tried, but then it never triggers, so that's good. Amazon, interesting setup for a low. We do have quite a nice rejection here, so I slightly adjusted the levels. What you want to see is essentially the loss of this point of control, and as soon as we lose this point of control, we are going to go to the other side of the equation. 2.19R setup. We do have a double top that we're coming from, and this is the first consolidation, retest of this consolidation with this white candle, and then continue going lower. SWX broke out as we expected. It's moving quite nicely, very strong candle, very good volume in here, so it can continue going higher from here on out. And even on a weekly chart, you can see how strong this volume is in here. No particular target right now. We're targeting the equal highs in here, but my anticipation is probably going to go all the way to 100, and that's going to be a round psychological number. At this point, it's a little late to get into it, so I'm just going to remove it from the list so it doesn't muddy the waters, but it was a good trade nevertheless. You do have head and shoulders in here, and you can see how smooth these head and shoulders is versus the NASDAQ head and shoulders. Like, I don't know what this is really, but in here you can see like a proper head and shoulders. So SWX out. RBA hit target as well, so very good run up if you took it. Essentially, you pretty much didn't feel any heat and got there within 2 weeks. Essentially, that was a 2.25 type of play. IWM small caps moving very rapidly. We are getting into like a little bit of this crossing between 20T and 50T, which I'm not liking entirely, but I do anticipate we're probably going to get to the top before any type of consolidation or pullback. At this point, 50% of the targets already delivered, so I'm going to remove it from the list. UP, which is the US dollar play, has been moving quite nicely, getting initial rejection, have double bottom from the perspective of the patterns right now, and it actually is still pretty good time to continue going higher. What is stopping me in here is the Kevin Warsh testimony. It was a little bit too hawkish for my liking than I would expect from the new incoming chair. So it almost seemed like Theatrics, and especially with the Strait of Hormuz being reopened, and we'll see if that actually does happen, the inflation actually should come down, because a lot of the inflation is coming from the oil prices and the energy prices. If you dig under the hood into the inflation reports, that's what's driving a lot of the price increases. Of course, companies are not going to just decrease the price, but there might be a little bit of easing that when it comes to both the delivery and the prices that the companies need to pay, as well as the oil prices at the pump. So that is an interesting one. Still can enter in here, not the most ideal spot, but you know, you're just going to would need to adjust your R&R and make sure that it's actually worth for you to go and take it. You could also wait for it to pull back and then see any type of recovery in here. But, you know, surprisingly, I am sort of starting to feel a little bit bearish on the dollar on the DXY. So why don't we actually take a look into it? Not like bearish that, oh no, it's going to go down, but more so, it's probably going to come back in here and at least do a retest before it continues going higher. So from the seasonality of the dollar, it actually should be going higher for quite a bit of time. But with the entire Strait of Hormuz challenges, that is going to be a question mark for us. CSTM, so that's one of the things that has not been moving too well. And right now we do kind of have a double top in here, break of structure, break below 200T. So to me, this setup actually is probably invalidated already with this wick being taken out. I'm just going to remove it from the list for now, and then we'll proceed and see how things are going. Other than that, I do have quite a few of the additional names that I was able to explore. So XLRE is the first one. On a daily chart, you have a consolidation. If we are looking into this larger time frame, we have a consolidation at the top, and that is the bread and butter pattern if you are using the box system, and that should take these equal highs at the very least and then continue going higher to swap these highs on this side as well. So it looks very good, very interesting on a weekly time frame. Some people are saying it's another consolidation on a weekly time frame, which is going to allow us to break out, of course, to the highs. And if we consider this a box, that's going to be around the box projection as well. So we're aiming for about 50, 10% move, 3.19 R. Very interesting. And there is some news around the housing sector that is coming through, and that is that the housing bill is going to be sent to Trump for signing on Monday. So that is what might be driving this particular thing. PLD is another one of the names within that particular ETF that I just showed. We do have the bull bear line play in here. So essentially, once we recapture this point of control, recapture this 20T, what we're going to be looking at is at a very aggressive recovery to the top of the range, and that is going to be a 2R play. Other than that, I do have quite a few new names that are on the horizon for me for this coming weeks. I'm probably not going to be personally playing it, but happy to share them with my VIP community if you do want to make some deployments of your capital into other sectors outside of tech and outside of semis. And to achieve that, and of course, like and subscribe, and to my VIP Substack channel, and then from there you can go and access all of those names. Anyways, good luck, you all, and I hope you have a wonderful week.